Last week, at just about this time on opening bell, we had a heated debate between Peter Schiff and Howard Rosencrans over Fed policy. It got a lot of attention. Take a listen.
I'm in the camp that we're going to enter a corrective phase, so I'm a little more bearish than he is. I am certainly not in your camp. And I do agree with you. The Fed did get it totally wrong going into 2007, and the Fed got it wrong for a lot of years. However, since that bubble, you know what? They got it right. They did exactly what they needed to do to stabilize the economy and to create the beginning of a liftoff. My assertion that we're going to have a correction is because, yes, they do have to take a step back, but I don't see any earth-shattering damage, and had they not stepped in, we really would have been in trouble.
They didn't stabilize the economy. They prevented it from healing. What they did is inject it with more of the monetary heroin that was the source of the problem.
And Chris, right after that exchange, he's sitting here with me now. He emailed me with his take on that situation, and we wait to hear from Janet Yellen later this morning. That conversation comes in key for us to discuss. Peter was saying that the Fed actually prevented the economy from healing. Rosencrans' argument was the Fed got it right. Without the Fed, we would have been back in the Depression era.
Yeah, well, I don't think what they did then matters now. It's what the consequence is. I mean, right now, corporations have been borrowing, buying back stock, increasing their debt. And I think what Schiff was saying was that, hey, this is a problem. They're going to stop buying back stock. What are they doing with the money? Are they reinvesting in property, plant, and equipment? Are they really investing in, growing their companies? The answer is no. They've been buying back stock. That's not growing the economy. Earnings are up, yes. But when the party's over, when the hangover starts to set in and the earnings aren't increasing because they're just buying back stock, that's a problem.
So it sounds to me like you are more agreeing with the Rosencrans argument that while that might have helped the situation temporarily, we're going to have to face that eventually.
Oh, we're going to face the music, and I think it's going to be when the earnings don't hit. I mean, today we're talking about J.P. Morgan beating. As soon as we hit a quarter where earnings start to fade, I fear there'll be a nice correction, meaning 10%. I know that Faber says, it's going to be more like 30%. But I think you have to be prepared for that. And what I say to people is that don't be surprised if we see a 10% correction. I'm not going to panic and run crazy, but I think that could happen.
Todd's shaking his head and laughing. Please.
I am, because, look, I've been hearing this argument that the Fed and all the repercussions of the Fed being involved with 4 QE programs and what it means for the U.S. economy. Look, we can all agree that, yes, if they weren't there, what Peter's saying was that the economy would have just shuttered. We just would have collapsed. Here's the problem with the economy, though. It needs the Fed. You actually still want another round of QE, in my opinion.
It's on life support, so if you have more adrenaline pumped into the patient, I think that's the argument, is that once you take them off, they have to live day to day without the injection of the Fed.
It can't grow organically. I mean, that's the thing. So it needs help right now.
It can't?
It can't grow. It cannot.
It needs to grow. If we can't grow organically, then the whole country's sort of on, living on air.
The Fed, you still need the Fed that's there as the safety net. The other side of it is that worried about earnings, a poor earnings period. It's not going to happen. It's at the expense of human capital. You look at this on every first Friday of the month with the labor picture. You don't have the jobs that are being created. The reason why companies are able to beat these earnings
EPS is based on less shares in the market because there's been so many stock buybacks.
They're beating those EPS numbers because of the expense of human capital. They're not hiring or they're laying off. J.P. Morgan even said it today in their report that they still need to downsize.
I want to chime in here with a recent comment from J.P. Morgan CEO Jamie Dimon on the conference call following the better-than-expected earnings reports. He said, quote, companies are still not stepping up their capital spending. What does that mean to you?
No, that's exactly right. But I think the point is that we're so dependent on the Fed. We're so dependent on easy money policies.
Yes.
That what happens when they start to taper? And tapering doesn't mean going the other direction. It just means tapering and making less liquidity. It's still a lot.
They're doing it now, Chris. They're tapering now. And look what's happening. We're hitting higher.
They're not out of the market, though, Todd.
Not entirely. But look, it's a step in the right direction is what you're looking for. I'm a trader. I want more QE. I say let the Fed keep doing what they got to do.
Let me go back to the original question that I asked those gentlemen that morning, and that is, if you are a retail investor, you're a mom and pop investor, you've got a 401k, you're buying into the stock market every single day, should you care what's propping up this stock market? Should you care that the Federal Reserve's unprecedented involvement has actually pushed these equity levels to where they are today?
Absolutely. You definitely want to have one eye on what's taking place, on what's propping everything up. However, when you start hearing headline numbers, look, 200,000 plus jobs, that's the headline number. Unemployment rate going down. Earnings today were blockbuster. This is great for the retail investor. They need to get into this market.
If I'm someone in my pension years, I'm retired, and I have a lot of money in the fixed income market, and I don't even realize the rates start going up. Oh, those bond prices start to drop. Wait a minute. I'm in a safe investment. What happened? All of a sudden, my bond prices have dropped 10%.
What are they doing in bonds anyway? With interest rates so low, they should be in the stock market,
when you're
Chris.
65, 75 years old, it just doesn't make sense to have that kind of risk.
The bigger risk is not being in the market.
That's not appropriate for an investor that's at that point in their life, though. So
nobody ever got rich off of asset allocation.
Okay, so but Todd, to go back to the original point that if the Fed completely unwinds its, gets out of this bond buying program,
catastrophic,
and stops being the backstop to this market, which eventually it has to do. What happens to the stock market? You've got J.P. Morgan's Jamie Dimon this morning saying that the economy is really not. It's really not where it should be. It's really not coming back. Companies are not stepping up capital spending. Has the Fed's involvement really helped us that much, other than giving us this perceived notion of improvement?
You're a brilliant question, because when you look at that and also the stimulus coming out of Washington, why are retail sales only growing at 0.2%?
That's disappointing.
It's very disappointing. This economy cannot thrive on its own, so we do need the Fed. When is that going to happen? It takes place.
But I think you're making my point. The point is that there is downside risk in the market as they step out, when they have to step out. Or if they keep going on this freight train, I think it goes back to Schiff's argument, is that that's a train that's going to end in tears. So eventually they know they have to step out. And if they don't do that soon, it's just prolonging a situation that's going to be bad in the end. And I guess if you
Schiff, are you listening?
No,
We've got somebody actually defending your argument.
I agree. 2 years ago, I was saying, geez, we should start positioning against higher interest rates and then therefore not being invested enough in equities.
Both of you, hold on to those thoughts. I'm going to keep you around. You're all riled up. We've got